The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on May Day, Thursday, it was a bit of a two-sided trade as we started higher, worked lower, and then into the close, we found a mix to higher session, especially soybeans being oil. Corn and wheat, though, kind of just hanging around that unchanged market to the close. Livestock, a mixed day there as well. Let's get perspective. Joining us now for our weekly conversation, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, welcome into Market Talk. Happy month of May. I got to say, it was kind of an interesting trade day. Money flow started well on the morning session, then kind of faded, then kind of came back. Felt like that classic kind of two-side trading day.
Yeah, kind of classic two-sided trading day. And when things trend, you kind of get a sense early on. We saw some strength, and you go, boy, it just doesn't feel like this is going to hold. And it didn't in corn and the old crop. And again, in wheat, in particular, the KW, the Kansas City wheat, which just continues to kind of grind itself to death here. But a lot of movement in a lot of markets today. When you kind of step back and look at big picture, maybe a little bit more risk on again in the equities. Stock market up today, reaching its highest point since April 3rd. This feels like it was yesterday. That's a month ago. So some movement there. And then we should talk about the live cattle as well. Interesting movement on the front months, a little support, some really good cash numbers we're hearing, and good strength in the product values here as of late. Yet the deferred months not really wanting to participate, seems to be a little bit tepid. Maybe the idea that, Jesse, that Packers are kind of securing their inventory for this, let's call it spring/summer grilling season and Memorial Day, which does make some sense too. There's generally a bit of a demand push there, and so maybe that's why we're higher there. But now with some vengeance, that April went off the board on the live cattle this week, and June really didn't pick it up. It tried to and kind of faltered here.
Well, a few things to unpack there. Let's start with Kansas City wheat, and maybe talk to me about what you're seeing on these charts. You mentioned grinding lower. I believe we set some new contract lows again on Thursday. I mean, is it all tied to weather? I know we've been getting some good rains in the plains, but I mean, is it simply weather? Is it money flow? Is it a combo of factors? What stands out to you in Kansas City wheat right now, Brian?
Well, it's not only Kansas City, but just wheat in general. But you have three things. One, you do have improved weather in the Kansas City wheat contracts. So, as an example, the market percolated up a little bit in early April. We saw approaching, let's call it 590 in the July contract, and here we are today about 527. So, took about 70 cents a weather premium out. The interesting thing there is crop ratings dropped about 4% 2 weeks ago, picked it back up this last week, yet the market lost all of that ground. So it's the perception that the wheat crop is kind of on the home stretch here and looks like it's going to be in better shape than what I think a lot of us were thinking maybe several weeks ago, considering how dry and the lack of moisture. So just-in-time rain's beneficial there. But the money flow has been negative wheat. It continues to add to short positions. The trend is down. There just isn't much export activity that I would say really is picking this up. We've had a big blowout in the dollar here this let's say winter and the spring. That hasn't helped. It's just a market that has this negative tone with the managed money continuing to stay short, adding to positions.
Well, I know wheat and corn have been coupled together a little bit here this week. You look at that corn market from Thursday, a pretty uninspired trade day. You mentioned how we lost a bit in old crop, trying to hold that 470 support level, for instance, in July corn. But even, new crop too was pretty quiet. Good export sales, I would say, but corn just doesn't seem like it has much of a story right now either as we track a rapid planting pace across the Midwest, Brian.
There just isn't much that the Bulls have to feed on right now. And I'll tell you, to me, the overriding factor isn't so good export sales again today near that 40 million bushel mark. So we're selling corn, right? Yet the market is it's got a two-pronged battle. One, it's got this wheat market tugging. And wheat prices are not that far from corn prices. So you've got that battle. I think the biggest thing though here in the last several days in the corn market is just that you've got a 6 to 10 day outlook, and those I've always said I think you can put a lot of faith in those being generally accurate. We've had 3 days in a row where the eastern corn belt, or basically everything east of the Mississippi and actually a little bit further west than the Mississippi, that goes drier than normal, so below normal precipitation, above normal temperatures. So there's going to be a lot of corn planted in ground that people have been waiting to kind of go with. And then in the West, the planting progress, as we saw in Monday's crop progress numbers, showed pretty good progress to date. Can afford maybe some delays in some areas because they'll take the rain. It's been pretty dry.
Mhm.
So you really got 3 days in a row of 6 to 10 day outlooks that favor moisture where it's needed, dryness where it's needed, a warm up in temperatures. Boy, it's hard to argue that that's a bullish forecast. It really isn't. That's about as good as you could order. I don't think you could design it any better than that.
How about that soy complex? We mentioned soybeans and bean oil had a decent rally into the close on Thursday. So we start a new month, and you look at some of those charts on the soy side and some of the news that's been, flowing in and out of there. Again, not a lot of news like the core to the wheat markets, but what stands out to you in soy right now, Brian?
Well, the continued good or resilience of the soybean oil market, and that pushed in the new contract highs recently. I'm just looking at the date here on the 25th of April. It's pulled back a little bit. And so the beans have held in there pretty well. And again, the backdrop to beans holding pretty well is one, soybean oil, two, smaller acres. We're not sure what that acreage number looks like because we saw on the 31st what it looked like, 31st of March, but there's quite a bit of sort of scuttlebutt that maybe corn acres could actually steal another 500 million from beans. So ultimately, you start getting about, roundabout ways, you could get some pretty tight projected inventories if the market views weather is less than ideal. Now, if the USGA pushes out a 52 bushel yield, we're probably still going to go carry out some. So the market doesn't, that we're kind of stuck here. The other market that it's like throwing some paste up against the wall or spackle and watching it dry. It's the soybean meal market. My goodness, it's really kind of stuck in that 300 or a little bit under, $300 per ton or under, which is good long-term support and good value to end users, but there's nothing bullish happening there right now. The idea is to crush us for the oil. You're going to have plenty of meal around. Got corn that's adequate in supply. You just don't have a shortfall of protein products or grains right now that's making decision processes by end users to say, "Gosh, we need to step it up and get it bought." They're just buying as needed.
You brought up live cattle at the open of the segment here, Brian. Let's talk about the cattle markets a bit, and kind of a mixed bag in the futures side anyway. Thursday, as we closed out the trade, got a little bit higher in some of those front month contracts in fats. Feeders was still a little bit lower, but you mentioned some of the cash bids that are out there being reported this week. I mean, couple days of ho hum futures activity, yet cash remains strong. What stands out to you in cattle right now?
Sometimes I have to remind myself and remind our customers that the June futures contract is the expectation for cattle prices in June, not on May 1st. So you can get that discrepancy between cash and June, but typically if April or the front month goes off at a higher value, you'll get some push. And I guess you could argue we did today. June up $1.25 at 209.65. But remember, April went off in that $215 area, right? So June just didn't kick it in gear and pick up. In fact, yesterday we posted a pretty significant reversal, bearish key reversal near the top, which just means you had a bigger trading range than the previous day and a lower close. So I think there's a little bit of caution there, yet you can't dismiss the fundamentals, which shows good cash prices, good cash activity. Cutouts remain firm. There have been just choice select cuts. There have been some activity down on some days, but in general, just pushing into step back a little bit and look at the big picture. New highs there, limited supply in the country. As we talk to cattle producers, cattle people in the country, it's everybody's kind of saying, boy, just can't believe it. But the reality is demand is hung in there, and it looks like processors are willing to pay up. Is it for um, Mother's Day, Labor or Memorial Day, grilling
Mm-hmm.
season? Probably all of the above. And maybe that's why the back months are a little bit tepid. August only picking up 60 points today, considering the discount. But suffice it to say, I think we go back and look at long term. Jesse, we continue to argue that the supply remain limited. Talked to a large cattle producer, cow calf operator in Montana, and he's just like, nobody here seems to be really on the expansion bandwagon. There's too much invested in these cattle and calves and cows to invest in breeding and holding back supply. That's a lot of input.
Brian Doherty with Total Farm Marketing joins us here today on Market Talk. How about the rest of the livestock sector from Thursday? Hogs, dairy market, anything else standing out to you with the rest of the livestock trade, Brian?
Yeah, the milk market has stood out here, and recently some good punch higher and trading firmer today, 39 to 40 points higher. The June contract 17.76, so that market got battered, trading down under 17. Now it's starting to look like it's found a bottom. You've actually got a head and shoulders formation there. That all points to higher. That gets us to about 18 and a half ish on the June contract. So we'll kind of keep our fingers crossed we get that. But you're seeing the market respond to these lower cheese values. We're seeing cheese start to pick up. Butter starting to show a little bit of life. I think there's a little bit less, maybe a lot less concern about tariffs right now and the fear of what that looks like. And I can just kind of focus my attention right out to the stock market again, where we said that's at a 1 month high. So looking at maybe just better confidence and good value. And so that's what I think we're seeing in the milk market here is we're starting to really see the demand side pick up and some pretty good product movement at these rebounding prices.
I did want to get your take on the stock market, the outside markets a little bit more. I mean, we have just seen a slew of data here for the economy in the last several days between the GDP, the contraction there, things like the PCE, inflation index, PMI, all these different things that a lot of economists and stock market folks, they look at, put a lot of weight on, plus the continued unknown between the US and China. And, one country says this, the other says another thing, and just all of that back and forth. I mean, as you look broadly at all of this data, news, the economy as a whole, anything standing out to you as you take a look at all of this, Brian?
Yeah, what stands out is just what you kind of encapsulate all of this sort of weight and focus on all these different variables and how does it fit in. If you take again, my words, a step back, you've got a new administration that's pushing a lot of change that has a long-term vision, at least in their view, that we need to bring this country back into a manufacturing country. And so you're going to get all these different reports and all these different talking heads talking about it. I think the final vote for the moment rests just how does the stock market feel about it for the moment? It seems like it's giving it more of a vote of confidence. Looked like the Trump administration went really hard at the tariffs and really kind of shook the world up and then pivoted from there and backed away. And it sounds like there's deals in the negotiation. I would agree with Trump. Yesterday, he said in his cabinet meeting, he said, look, the GDP number, I didn't come into office until January, 20th. He said, so that's reflecting time before I was even in the office. But he said it'll take a quarter or two to probably see changes in direction. So the media, and rightly so, will hold his feet to the fire on that in the future. To see if that shows some accuracy there. But what I'm sensing is that the kind of the shock and awe of change isn't so much shock and awe anymore. And it's like, well, give the administration a chance, while the other crowd says, we're headed to a disaster and whatnot. And it's probably somewhere in the middle, stop, start. So it's a matter of your opinion. I think the administration had been concerned that in the last bill that was passed in Congress, the Inflation Reduction Act was anything but an Inflation Reduction Act. It was an inflationary act, and you've got to get back to core jobs rather than government jobs. And so we'll see what happens. But I like the way the market seems to be voting. I like the way we see what appears to be demand moving back into the milk market. I like the way the cattle market is held. Somebody's buying stuff, and that's a good sign.
Brian, final thoughts from you? Anything else you would mention or reiterate to folks this week?
Well, I think we talked about it last week. Just keep a really tight eye on this grain market. Nobody really likes bean or corn prices where they're at. If they do, they're comparing it to something much different at lower. So then you do like it. But I think we have to be, for the moment, of that generalized mindset that as long as it looks like the weather is good enough and the forecast is good enough, it's going to get tougher and tougher to rally grain markets, because the vote is on the producer, the vote is on the genetics, the vote is on the tillage practices to all bear well. So that being said, maybe defensive posturing here in the near term, but be prepared to shift gears. End users in particular, really don't fall asleep with the switch. There's handwriting on the wall with some of these hot dry forecasts for summer, and if you're caught up into a real hot dry forecast in July and you haven't got anything bought when you could have bought it down in this level, or at least bought call options, you really need to kind of think about how you want to manage your risk.
Brian, if folks want to talk with you and the team there at Total Farm Marketing about their marketing plan, have a conversation, I know a few ways to get in touch. How can they reach you, Brian?
Couple ways to reach us. One is a phone call, so we enjoy those probably more than anything else. 800-334-9779. Again, then I can not only converse, but I can hear things. So I'm a little bit old school. But if you like emails or just want a quick brief answer, Brian with a Y at totalfarmmarketing.com. And then we've got a website that has a lot of resources on it too. Total Farm Marketing, www.totalfarmmarketing.com. So take a look at that and feel free and to give us a call.
Brian Doherty, Senior Market Advisor, Total Farm Marketing. Always great to talk with you. Have an awesome weekend. We'll talk to you next week, Brian.
Jesse, thank you so much. Much appreciate the opportunity to stay in front with you, and have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.